Good afternoon, everyone, and welcome to another edition of Coffee Talks, where we talk with developers and architects. Today, we have a very special program for you. We have two major developers from Miami. We're going to find out from them what they're thinking, what they're seeing. But before we get started, I want to thank our sponsors for this program, Burden Accounting. They're not just good with math, they are magicians. And if you see their client list, you see why people use them. They're amazing. So if you do need accounting, Burden Accounting, thank you for sponsoring this and allowing these sort of conversations and talks to happen. I'm very happy to have Dezer with us from the Dezer organization, and also JP Pérez from the Related Group. They're both active, very major developers in Miami. Related is the largest developer in South Florida, and Gil is known for his very flashy and very expensive condos that people love from all over the world. His last building, the Porsche Tower, actually that's not his last building, but one of his buildings, the Porsche Tower, a very unique building, at one point had the highest number of billionaires than any other building, I believe, in the country, if I'm not mistaken. But let's jump right into it. Obviously, the pandemic is going on. How is that impacting the business that you guys currently have in the pipeline?
Well, during the pandemic, it was actually, it gave us an opportunity to double down on what we were working on. We were working from home, but everybody was still working, and we were pushing our pipeline. We had a lot of projects that we were working on before the pandemic started. And as a matter of fact, just last night, I don't know if you read the news this morning.
I read it on The Real Deal. Huge congratulations to you. It's the largest project I know that you've ever done. It's a 2 million square foot project with hotels, resi, condos, townhouses. Tell us a little bit about that, and tell us if this is the right time for you to build right now.
Well, last night we got our our master development agreement approved, the first reading of in the city. So which that means that now we have like the program of what we're going to do. And so from there, we have to start now figuring out each building as it goes. And that's going to be based on market conditions and everything else. But the overall site plan and the project and everything is now ready to go and ready to start, getting serious. Do you have
financing for that already, or how do you plan to capitalize it?
We don't have financing today, but we don't necessarily need it today either. I mean, we've been fronting all the costs ourselves to do all this kind of stuff, and we're there. The first step in the development phase is we have to move the existing tenants into a new building. So that's going to be step one. We have some tenants in there that like Winn-Dixie and other big box retailers that we're gonna physically move from their location into a new location and have them close down on Saturday and open up on Sunday in the next location to free up the rest of the land for the project.
The need for affordable housing has been, you need it more than ever now. Is there any part of it that's going to be affordable housing?
Affordable housing, I leave to JP. He's the guy who he sets the balance on me.
JP, your father, when he started the company, he got his start by doing a lot of affordable housing. Are you guys planning to do anything to sort of address the market conditions right now?
We are actually, our affordable division is extremely active. We've had 3 groundbreakings in the past 30 days, 45 days. Actually, Secretary of HUD, Ben Carson, came down and attended one of those. We're actually finishing our second phase of Liberty Square, which is the largest affordable housing development in the country. I think that's a total of 1,600 units. So we've been extremely active. Even during the pandemic, the rental division, which is the market rate division, has over 4,000 units planned to start within the next 12 months from South Florida all the way out west to Phoenix.
You guys are trucking along with the affordable housing. You're seeing demand for that increase, obviously.
Yeah, no, affordable housing, there's always a demand for affordable housing. We open these up basically, and within 30 days, you're 100% leased and then occupied. So there's always a need.
That sounds amazing. That sounds amazing to open something up and have it leased up by, in 30 days. Why not just do that all the time? Why do the really high-end luxury stuff and not just put all your focus into affordable housing? Like some of these condos, especially now, there's obviously a glut of luxury condos, not just in Miami, but in New York and Los Angeles as well. So why not put the focus into an area that can, that has a ton of demand for it?
Well, we do have so we are, that division of the company is 100% focused on that area, right? So we have multiple divisions, right? We have affordable housing, which has a president, and he runs that company. We have a market rate apartment development, which is 100% focused on market rate and mixed use. And we have a condominium department, which is only focused on condominiums. And then we have international. So, what's great about affordable housing is that it's a business unit that always has demand and always will continue to have projects, right? It's not a cyclical business.
Right, of course. So there's also, right now you're seeing a lot of leases that are going to be coming up, and you guys have a major sort of market rate rental department. How are you guys dealing with a lot of these renegotiations that are happening right now? People are asking for more discounts. They're asking for sort of more give backs. How's that working right now?
Our average collections have been in the mid 90s, 93, 94%. And
does this include stuff that you're collecting from deposits, or this doesn't include because in New York, in some cases, the landlords say we're at 80% collections, but then they're tapping into people's deposits to make up.
No, we have not tapped into deposits. That's just pure collections from rent. We've had to increase some concessions to continue to maintain the leasing velocity. But we've been very active in our portfolio to accommodate and make changes with all of the new COVID CDC guidelines. We were one of the first companies to implement we have a wellness certificate, which you only can achieve if you follow certain management and cleaning and administration protocols.
That's for your affordable housing units that you.
We did it throughout affordable, market rate, luxury condos. It didn't matter the type of product. It was a company-wide decision to evaluate all of our jobs.
Do you see right now for you guys sort of shifting and pivoting because there is so much luxury condos on the market? I mean, obviously, the project that you just got approved for yesterday, that includes a lot of different sort of price ranges. But in general, you and JP just partnered for the first time as second-generation developers on the Armani Casa, and that came out right at the start of the pandemic. But you guys continue to do decent sales with that still, and where most of those people, I'm asking a lot of questions here, but where most of those people, from the Northeast, are you still getting the Russian buyers? Are you still getting the South American buyers?
Well, we were extremely fortunate to be able to have closed the building, the Armani Casa building. We started closings in December of right before last year of 19. So between December and March of 2020, we closed about 85% of the building. So we were able to pay off our loans and get the monkey off the back, if you will. And that's when we had our opening party with Pitbull and everything else. And, when the Armani people came down, and we had our opening party, and a week later, COVID happened. And so we really, sometimes you have more luck than brains. I mean, we got out at the right time. We were able to close before this whole disaster happened, and we're not killing it, obviously. But the way I see the luxury, because you said I get high on my own supply, so I look at myself as a customer, right? And I look at myself, my friends, people around me. COVID affected us all, obviously, financially too. I mean, this year I'm not going to make as much money as I made last year. I might not make anything this year. It depends on what happens. But at the same time, people also retook stock in their living situation and realized maybe I should have gotten that extra bedroom for the home office, or maybe I should have gotten the better view. So there's within that, even though they might not have made money, they still have money, and they still have assets that they can sell and trade and move around. And so we're seeing a lot of that's happening. There's still always going to be demand for great product, and that's the way we look at it. And that's why and on the beach in Sunny Isles, yes, there's a saturation, if you will, right? But that's not saturation. It's just 4 or 5 projects with a bunch of units to sell. And as soon as that gets cleaned up, which we've seen it before, we've all been in this movie before. I mean, I remember in 2011, we were looking at each other like, uh-oh, what are we going to do? And then all of a sudden the Brazilians showed up, and they bought out all of Trump Towers, So I'm kind of praying for some Brazilians to show up, but at the same time, I know that something could happen, something will happen. South America is going to be opening up in the next couple of weeks. And we're going to start seeing, we're getting already a lot of calls of people asking, how do I even move to Miami? I mean, full-time move to Miami. So, I think it's going to be, we're going to get a pickup. We still were making sales. We did, since the pandemic started till today, I think we believe we did 7 sales at Armani. Right. So from March to now. So it's not great. It's not great, but it's I'm sorry?
We've done more than that.
9?
10.
7, 9? 10. Okay. All right. See, I don't even know the numbers. But my point is like that. So but I know we were averaging about 12.
Working and somebody's in Big Sky, Montana driving.
That's right.
Somebody's got to work over here.
Too. So no, but the answer is, even in bad times, good product sells, and so that's where we are today.
1,000 people moved to Miami, to South Florida or to Florida in the last, since the pandemic. That's a significant number of people.
And then, going back to high end, just to talk about it. I don't know if you've been tracking what's going on in the high end homes, but every home, 10 million plus, you can't touch them anymore.
Well, that's what I meant. You have people who are moving down there, but they're not necessarily moving to condos. They're looking at the rentals and they're looking at homes.
That's this year, until they realize about the gardener and the pool guy and this one and all the headaches it is of owning a home and the salamanders running through your house and all that kind of stuff. So.
JP, how was this was the first time that you and Gil partnered up to do something, and this was the first time that it was your projects. It was directly your projects. How was it working with Gil?
Oh, it was good. We have like minds, right? We enjoy a lot of the same things. I think we think alike. It was actually one of the partnerships I think was the easiest. We never really had disagreements, and if we did have disagreements, we were able to talk about it. We're looking to do more. We have a secret that we're not going to tell anybody here. But I hope to be doing deals with him. He has 2,000 units to develop on his project that he just got approved, and I hope to be involved in that at some point. So I think it was, it's good that the next generations come together and works together.
And there's, when the market was booming, and I really feel like until now it was still, very active. And you were going to places like Wynwood and Edgewater and places like that. Gil, you mostly stayed away from those fringe areas. But JP, you guys didn't have a choice. You guys build everywhere, everything and anything, and you were in those areas.
I stayed away, but I was partners with JP on Hyde Midtown. And we've done, yes. So on that project with Related, before JP actually jumped into the company, Carlos Rosa was the counterpoint there, but we were involved in Hyde Midtown. So we do a lot of projects that you guys don't know about because we come in as silent investors.
We know about it.
Well, also we were partners in Hyde Hollywood. Yeah. But again, we were quiet about it because it was the Related show and they ran the show, and so on those things we stayed quiet.
Yeah, but what I'm saying, I guess, what I'm asking is that are you still looking at those sort of not super central areas, those fringe areas? Are you still looking at Wynwood? Are you still looking to do stuff in those areas in a market like this?
This is directly
for you, not for me.
Yeah, no. In Wynwood, we have we've accumulated sites. I think we have 4 now. That's almost 2,000 units that will start in the next 12 months.
This is stuff you acquired since the pandemic or before the pandemic?
Mostly before. We acquired one. We had one under contract prior to pandemic and closed during the pandemic.
Got it. Okay. And so you're still actively looking in those markets. You do believe in those markets.
Yeah, no, we're very bullish in Wynwood. I think that's one of the neighborhoods that has the most growth potential. Mm-hmm. I think it's still it's not a mature market yet, and it has there's a lot of room for growth, right? You're getting office now. You have residential, and you're going to have a lot more residential coming, which a lot more office following. So it's really, truly going to be probably one of the most vibrant communities, I think, in South Florida when it's all done.
One of the things we're noticing really in all the major business hubs is that people are realizing people don't need to be in downtown Miami or downtown to have office space. Like businesses and people are more dispersed. People don't have to be in the office. They don't all have to be there together. People don't want to work from home, but they don't necessarily need to commute an hour to get to their downtown office. Are you going to see that change in Miami where people are like, well, hold on, most of my staff is in Wynwood. Why not have some of the office be in Wynwood. And I know you guys have a Wynwood 25, which is a very beautiful office tower there. Are you guys looking to do more offices in sort of outside of downtown?
Yeah, we're finishing our headquarters now, which is 100,000 feet in Coconut Grove. And actually we're, I want to say 70% pre-leased, opening in March. And those are a lot of tenants that the CEOs, a lot of them are living in Coral Gables, Coconut Grove, and they no longer wanted to commute. So you've seen a huge demand in areas like that. In Wynwood, we're actually getting a lot of demand from tenants that were the executives live in Miami Beach and just want to drive across the causeway, and they're there in 5 minutes.
Right.
And a lot of their employees are actually renting in Wynwood 25. So commuting is definitely a factor in people's decision. I mean, no one wants to be in a car anymore for an hour, hour and a half. That was, that day of the sale.
You're moving your offices there as well, right?
We're moving to Coconut Grove. We're in downtown right now, yeah.
Oh, great. Yeah, that's really interesting. And for you guys, Gil, in terms of what you have, is there any assets that you wish you could unload right now? Do you feel like you want to unload your hotel assets or?
Oh no, I don't ever unload anything. I'm a real estate hoarder, but we're also working on. We have about 40,000 square foot of office in that new project that we were talking about, in the Intracoastal Mall. And in our sites, so in one of our sites in Sunny Isles, we have some space for office also what we're doing there too. So that's office out of the urban core. Hopefully, looking for that guy who just wants to get out of his condo and go across the street and have a place to work.
I feel like there's going to be more and more of those people.
Yeah.
Are there any assets that you wish you could unload right now?
Me?
No, not right now. No, we also like to develop, hold, build cash flow. We don't own hotels, not much retail at all. So we're really not looking to unload really anything at this point.
All right, how about last thought? If you guys could each give a boost for Miami and create some encouraging words to everyone listening right now.
Miami has been always a resilient place. We've been through ups and downs over and over again. I've been doing this now 23 years in Miami, and I've been through the cycles, through the good, through the bad, and we always come back. When we come back stronger. We come back more expensive per square foot because replacement costs go back. If anybody has the opportunity, now is the time to buy. It is a buyer's market. We're not gonna pretend like we're sitting here, trying to hold our price and wait for the last dollar. It's a buyer's market.
Everything's negotiable.
Everything's negotiable. Of course, we're not giving anything away either, because what we know is we're holding out to gold, and we also know that there's no new project starts as far as luxury condos going. There's no new project starts happening. So the latest buildings will be the newest buildings for the next 5 to 7 years until there's another building to replace it. So, that's why I'm not never in any rush to sell the units. Of course, we build them to sell them, but we'll wait patiently to get the right dollars in, and it's happening. Like JP said, we sold 10 units when nobody was doing anything. So now that the world is going to open up, or it has opened up, we've seen a lot more interest, and the next couple of months should be very, very good.
JP?
Yeah, I think what this pandemic has done has further shown why Miami, South Florida in general is a great place to live and open up a business, right? And I think you're going to see that even more once it starts getting cold in the Northeast and people are stuck in their apartments and everything's not open. Taxes are horrible up there, so it's a much better tax climate down here. So I really think that, like what Gil said, we're going to come out of this much stronger, and actually probably even more expensive, just because of the amount of demand, and there's no more supply that's being built at this time. So, I'm very bullish and optimistic on.
You guys feel good. You guys feel good that you have the right product and that there is going to be demand for it, at least, if not this year, at least in the next couple of years.
Oh, for sure.
Yeah.
For sure.
I want to thank both of you guys for taking part in this, and I want to thank our sponsor again, Burton Accounting, and thank you everybody for tuning in.